Good evening, dear traders. Let's talk about Bitcoin today because it's a key support level. So, Bitcoin continues to be one of the weakest major risk assets in the market. This weakness is especially noticeable when compared to US equity indexes, which remain close to their highs. We can see it here. So, S&P 500. So normally such a strong risk-on environment would provide support for cryptocurrencies, but this time the picture looks very different. A few months ago, the main driver behind Bitcoin's rally was ETF inflows and broad optimism toward the crypto market. Today, that situation has changed significantly. Buying interest has weakened, trading activity has slowed, and the market increasingly uses rallies as opportunities to take profits. Another source of pressure comes from capital allocation. A portion of liquidity continues to flow into equities, particularly technology and AI-related companies, where investors currently see a clear growth narrative. As a result, Bitcoin has become less responsive even to positive market conditions. Fundamentally, the picture remains mixed. On one hand, expectations of future Federal Reserve easing are traditionally viewed as supportive for cryptocurrencies. On the other hand, markets are becoming increasingly focused on the risks of slower global growth, and in such an environment, investors often prefer more liquid and established assets. Geopolitics also remains an important factor. While there have been temporary periods of de-escalation, the Middle East conflict has not been fully resolved, and this periodically revives demand for defensive assets. And so far, Bitcoin has not convincingly demonstrated its role as a true safe haven asset. From a technical perspective, the market structure remains weak. Price previously failed to hold above the 79,080 dollars area, which acted as a major resistance zone. Following that rejection, selling pressure intensified and recovery attempts remained limited. The nearest support zone is currently located around 64,000-65,000 area, and this is not only a significant technical support zone but also a level whose loss could dramatically worsen market sentiment. Particular attention should be paid to the risk of margin liquidations. A decisive break below 33,000 could trigger another wave of forced long positions liquidations and margin calls. Such events often accelerate downside momentum far beyond what technical analysts alone would suggest. And there is another important observation. According to research from Bogdanov Market Research, the aggregate breakeven price across all groups of Bitcoin holders is currently estimated at approximately 53,008. So here it is. Historically, major cycle bottoms have often formed only after Bitcoin traded below the aggregate break-even level of market participants. And these periods typically coincide with large-scale capitulation, forced liquidations, and the final market cleansing that removes excessive leverage before a new bull cycle begins. For this reason, a move toward the 53,000, 54,000 area cannot be ruled out. In fact, some analysts argue that Bitcoin may need such a deep cleansing phase before establishing the foundation for a sustainable long-term recovery. As a result, Bitcoin remains under pressure and continues to underperform most major risk assets. While equity markets maintain bullish momentum, the crypto market is showing signs of capital redistribution and growing caution among buyers. The key question for the coming weeks is whether the 65,000 aggregate $1,000 support zone can hold. If not, a break below 33,000 could trigger a new wave of margin liquidations, potentially opening the door to a deeper decline toward the 53 and 8,000 aggregate break-even level, where many analysts believe a more meaningful long-term bottom could eventually emerge.